What is causing this bear market? What shows that we are in a confirmed bear market that's going to last for a while? What's the best way I'm going to navigate through this mess? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Tesla and Apple have gone down about 7% each in the last 5 days of this brutal bear market. The VIX, which is a measure of volatility, it anticipates volatility, how much the market is going to change about a month out. So it's a prediction on what the market is going to do. And if it's highly volatile, things are going to change significantly, which is usually a pretty good measure of fear. And the VIX is usually, it's below 20. If it gets above 25, that's usually a pretty good indicator that you're in a bear market. And it's been 25 to 27 recently. Now, for this market to completely flush out and get over its bearness, we would like to see a flush out of about 40 or higher even. And that's the point where everybody's so disgusted, nobody will even invest in the stock market. So you usually have to reach that flush out point. We may reach it at a lower number simply because this has been going on for a fairly long time. It will continue going on at least till the end of this year and possibly further. Until we see inflation break, and we get the first indication of that on September 13th, and then the Fed's going to indicate how much they're going to increase interest rates on the 21st. Those are the two big markers for this month you want to pay attention to. The Federal Reserve will likely raise interest rates 0.5 on September 21st. But they also are meeting on November 2nd. And on November 2nd, that is shortly before the midterms. And I'm not certain how they're going to react then. We have to see more inflation data. But it's possible that they might take it easy because of the election. I'm assuming that they're affected by politics, which they're not supposed to be affected by, but I suspect they are. But in any case, in 3 months, we will be up at least 0.75 after the two increases, and probably 1% if he does 0.5 at each Federal Reserve meeting from here until December. In December, they can raise it again. So, and we're going to be living with this. I think the market goes down until we get a firm indication that they're done, that they're finished with raising rates. I expect them to raise rates to a level and then just hold there, and they're going to hold there for a long time. But if the market sees that the economy can handle it and they haven't raised it too much, it could be an okay thing. What makes it so complicated is how the Federal Reserve and the government are so at odds with the money supply. The Federal Reserve is doing everything they can to reduce the money supply, and they're reducing their balance sheet, which increases interest rates, and then they're going to increase the interest rates themselves. And then the government is passing all kinds of legislation that will put money into the economy. They passed the climate and inflation bill, which that is neutral in a sense, because they pay for the climate change and the health care that's involved with that bill, and the Medicare changes and the Affordable Care Act. That bill does so much. It's going to cost $700 billion but is paid for with corporate taxes, so its net effect is zero. They passed the infrastructure bill some years earlier, early in Biden's term, and that is an ongoing thing that releases money for the coming years. And the same thing with the semiconductor bill. That's like 230 billion that's going to be released to encourage companies to build semiconductors in this country, which is necessary. And then Biden forgave 10,000 to 20,000, depending on whether you're a Pell grantee or not, college student. He forgave 10,000 of college student loans that college students have taken out, and it's 20,000 if you also received Pell grants. So he's gearing it more towards students in need. So, but this increases inflation because you're making more money available to people for people to spend, and spend it they will. And also, I'm very much in favor of helping Ukraine defend itself. But we've given Ukraine about $10 billion worth of military equipment, which includes the javelins, the Stingers, the aircraft, and also we're helping NATO build up their defenses. And this is all a way of the defense industry is just being stimulated a lot. And of course, they're going to get a lot of business from NATO countries wanting to improve their inventory. And so that's very stimulative to the economy. And so Powell is taking money out of the economy, but he has the government throwing all this money into the economy. So we have ourselves one big bear market. So that's what I'm going to do. I'm going to play the bear market. A person is left with shorting. I'm shorting about 80% with SQQQ. I'm going to short real estate somewhat. I've taken smaller positions in DRV, which is a triple leverage inverse real estate fund. And I've also shorted China through CHAD, CHAD, which is basically shorting the 300 most active companies on the Chinese exchanges. For every dollar of the 300 most traded companies in China goes down, you make a dollar. It's 1 for 1. I'm showing you this chart because I'm showing you why I'm shorting the market. A line in pink is SOX. That's the triple leverage inverse fund on semiconductor stocks, and that's gone up about 24%. My favorite SQQQ is in second place, and it's gone up about 12%. Semiconductors are so news driven. The reason they've gone, this SOX has gone up dramatically recently is because NVIDIA was told by the US government that they only have one more year that they can sell artificial intelligence chips to China. We don't want to share the artificial intelligence semiconductors with China for understandable reasons. But they have 1 year from today to stop doing that. And that had a massive effect, not only on NVIDIA, but on other semiconductor stocks, simply because NVIDIA is such a monster in this space. In third place is the SPXS fund, and that is a triple leverage inverse fund on the S&P 500, of course. And that's done, fairly well. I think what holds them up is oil companies, but recently the price of oil has been coming down to like $87. And is that because demand is weakening? I think it's going to weaken in this country, which will bring it down. But also China has recently been having more lockdowns, and so that reduces demand in China. And so it's having an effect. So this chart shows why I'm so enthusiastic about shorting in this terrible bear market, which may get worse. 24% on SOX, the triple leverage inverse fund, and 12% on SQQQ, the triple leverage inverse fund on the 100 largest companies on the NASDAQ. Yeah, I will take those anytime. My portfolio is doing excellent since I've been shorting.
We appreciate your help. Thank you so much.